Hey there, hope you're doing well. Welcome to Snowpal's Polyglot Software Development Podcast. This podcast is not about engineering or software. As you know, our podcasts are predominantly in the space of software development, but we also do, podcasts that are outside that space, outside our comfort zone, if you will. So this one is going to be a little bit in the space of trading because we've shared some and we've created a fair number of courses, and we're continuing to create courses in that area, and also are working with collaborators and other course creators to publish finance related courses. So if you haven't checked out some of our courses that relate to this, I'm going to do a screen share and quickly show that to you. Let me do that, and then tell you what this podcast is going to be about. Yep. You can go to getsnowpal.com, and if you scroll down the list of courses, there's a bunch of them, and there's a number of them that deal with trading and investments. Right now, again, I'm going to share a disclaimer quickly that I'm not a professional investor. None of us at Snowpal are. We create these courses and share our experiences with you. Take it, with a grain of salt and almost like it's for entertainment purposes, but hopefully there's a learning or two that comes out of them, right? So those are the courses. You can check them out. This podcast is not it's a free podcast, so it's not uh, uh, it's not about any of those courses that we've published, but it's something that I thought of earlier this morning. I was like, you know what, why don't I do a quick podcast and share this? So without further ado, let's actually get started. But before I actually get into the details, let me just share uh, the investment disclaimer, like we do in all of our trading and investment related podcasts and courses and whatnot. I'm not a licensed advisor. Your trades are the result of your actions, not mine. Trading involves a significant risk of loss and is not suitable for all investors. In particular, past developments do not necessarily indicate future results. Graphs, charts, and tables are provided for illustrative purposes only. Investing is subject to market risks. Investors acknowledge and accept the potential loss of some or all of an investment's value, and sometimes even more than the original investment amount. If you have any doubts as to the merits of an investment, you should seek advice from an independent financial advisor. There is an inherent risk in investing, and there's no guarantee of return on any investments made. So now that disclaimer is out of the way, let's actually get to what I was going to want to talk about in this podcast. We're going to take a couple of securities that are of interest, at least for this conversation or this monologue, and we will just chat a little bit about that. And the idea here is, at the end of this podcast, you leave with hopefully more than entertainment here, right? So let me do a screen share first. I'm going to find that window. Okay, yep. So that's this is what we're going to look at here. So I've taken three different securities right here. Shake Shack. If you're a burger person, you probably have dined at Shake Shack. It's one of those reasonably high end burger joints. Cava is a Mediterranean. They serve Mediterranean food. It's like Chipotle, but not Mexican food, but Mediterranean food. And I don't know, they are not national. From what I understand, they are on the East Coast. Probably they have a fair number of locations, but they're not nearly as spread out as Chipotle is, at least at this point. SweetGreen is a salad place. You may have seen them at malls and other places. They actually look quite nice on the inside, and I believe they predominantly serve salads and fairly expensive as well. And they introduced, I believe, steak or something else into the menu, not too long ago, right? So just a brief introduction about those companies. Now, again, what's common between those three companies? They're all in the space of selling food, right? They satiate our appetites. So I want to take those three and just have just talk about them really quickly. If you see the numbers here, what I've done here is I just took the price change for all of these three securities from February from 2 weeks ago, right? As of the time of this recording, this is from 2 weeks ago. So it's about just shy of 10 trading days, give or take, because we had a holiday in between, so the market was closed. And you can see the price drop here, right? So again, I'm like I've said in the disclaimer, I'm not a professional investor. A lot of this language is very colloquial. It's nowhere near formal. But so hopefully, if you are not professional either in the space of investing, my hope is that some of this resonates with you. So you probably heard of the beta and the fluctuations, where there are companies that fluctuate with the index, and there are companies that fluctuate with the other companies in that same industry. So if you took three food companies, and let's say there was, the last couple of weeks, let's say the food industry has taken a hit for whatever reason, right? Avocado prices have gone up. I don't know how much impact it has in each of these three companies. I know they do have avocados in the mix. I just don't know how much it is relative to their cost and sales and whatnot. But let's say if there was an impact to the food industry, it's natural that a lot of the companies in that industry are impacted, right? So let's say all of them are in the food industry, but that doesn't mean all of them move at the same, move in either direction at the same rate as the other companies in that industry. Now, there could be a company that actually does not even move, uh, for the most part, in conjunction with the industry. I can think of Apple as one of them. I mean, if I've noticed that even on days where tech is down, Apple actually holds up pretty reasonably well, and vice versa, right? The days where tech is going up doesn't mean Apple's keeping up with that. So I've noticed that they are actually unique in that sense as well. They don't follow the herd, if you will, and they're not that they do that in any facet of their business. But even when it comes to actually their stock prices, that's what I've seen. At least that's my personal observation. It's not empirical data; it's just what I've seen. Similarly, if you could take companies in the food industry, we've taken three of them here, and they've had some fluctuation the past 2 weeks. But you see a sizable difference here, right? Let me make sure I'm still recording. Yep. Um, so Shake Shack dropped about 3%. This one doesn't show the actual price right now. I can try to go pull up the price, but let's ignore the actual dollar amount, because that actually could be misleading in some cases. Because the dollar amount of an actual security doesn't really mean anything, right? It's the number of outstanding shares times the price. It gives you it gives us the net worth or the net cap of the company, and then all the price earnings ratios and all of them relate to the price of the security, a per share value. But outside of that, in an absolute scale, the price itself doesn't really mean anything, right? Not much, at least. Uh, so Shake Shack's dropped close to 3% in the last 2 weeks. Cava, again, this is a window of time we've taken. This doesn't speak to what happened prior to that. Certainly doesn't speak to what might happen starting this moment, because nobody has the crystal ball, right? Uh, Cava has dropped about a little bit over 12%. I mean, that's a pretty big drop. Again, if you take a 2 week window, all of these drops are pretty significant. Maybe Shake Shack's 3% is not that much, but anything over a 10% in a 2 week window means something has it's likely that something happened, right? Maybe it's related to that particular company or the security. If nothing else, if the actual fluctuation is quite different between that and the other companies in that industry during the same period of time. Otherwise, 10% means something's there is some activity, right? There's some action there. SweetGreen during the last 2 weeks has dropped like 29%, and I actually want to talk about that a little bit. That's a significant drop. And if you go back prior to that and look up time before that and look up last year, you'll see there's quite a bit of a difference. I don't know if memory serves me right, they had a fantastic 2024. I believe they were expanding, and there was also talk about them creating having these infinite kitchens where they have bots, and where they don't have employees, or not as many, where there's only one person who was managing these bots, and they create the salad for you. So they're trying to cut costs but not by not hiring humans, right? So that's I think they had a couple of restaurants locations that had those infinite kitchens in action, are in play, but not all of them. And my last recollection is they were going to expand that. Now there is going to be a cost associated with that. Let's just see how much we can talk about it. But for now, let's just focus on these three things. If you're somebody who's looking carefully, actively, into investing in the food industry, this is something that might be of interest to you. You're like, what is going on here, right? Shake Shack is a fast food chain, right? Cava is, I guess it's not fast food, but it's not sit down, it's not full service either. So I know whatever the categories like urban upscale dining or whatnot, right? I say upscale because they're not cheap. You could be spending $12 to $14 per bowl on an average. Sweet Green might be along price just about there, or perhaps even more for salad. I mean, as somebody who's vegetarian, borderline vegan, but mostly vegetarian more than vegan, I have not been there because it's uncooked food, and if you're Indian, you recognize that vegetables have to be beaten to death before we can even consume them. So it cannot, even if the nutrition is long gone, that's all right, but it needs to be cooked. So it's not a place that I have dined. I've been there a couple of times, I think, but I'm not gonna, it's not my cup of tea. But every time I've been there, I've not seen very many people. And you might think, okay, it's probably a carry-out place. People are not sitting down there, possibly. But every time I've been to any one of those locations, or not me there necessarily, but walking past them, there's not been a lot of traffic, not a lot of foot traffic. So when they went up so much last year, I was like, you know what? Does it even make sense that they are actually going up like 50, 100%, or perhaps even more? I think last year, again, if memory serves me right, they might have gone up like over a 200% or something in 2024. So there had to be some. I anticipated some sort of a correction, and maybe it's getting, it's in that phase right now. You see that it's been dropping, and you see the graph. It's quite scary, right? It's just been dropping in the last 2 weeks. Now I don't know when the next earnings is. I have to look that up. But the reason I want to just create this quick video, the podcast, is there are different types of investors. One, people who invest in just about any company, even the ones that they are not familiar with, are acquainted with, or they don't do business with. But if you as somebody who who does like investing, I you know I don't know where I fall in that category, but generally, I prefer to work in invest in companies that I have some awareness of, from a personal interaction standpoint, right? I've eaten at these places, so I kind of know what it is. We had some interactions with the employees, people who work there, people who walk into those places. So you can make your own judgments over and beyond what the analyst might tell you, because the analyst ratings and judgments change all the time. It's quite fluid from what we've seen. Sometimes it drives the market, sometimes it's a reaction to what's transpired. So it's useful to be aware, right? Ignorance is certainly not bliss, so the more information the merrier. But I think if you have direct experience with some of the places that you're investing in, I think it actually might hold you in good stead. At least that's my opinion. So, Sweet Green, every time I've been there, I was like, you know what? I don't, I don't see them grow at that pace. What is their moat essentially, right? Because they're selling salads, and there's a lot of, I mean, anybody could start selling. Anyone in the food business could potentially be a competitor. It's not like you're creating like GPUs at Nvidia, where it needs many years and decades of research. I'm not trivializing food. It's very important. That's how we all survive and live, and we enjoy eating. But the question here is moat. How difficult is it for someone else to get into this space? A grocery store that sells salads, isn't that a competitor as well? So the question was, why are they growing at that pace? And while you could ignore price earnings ratio, which I don't think anyone should, but sometimes I read saying, hey, you know what, if it's a high growth company, don't even bother about P ratio, the forward P, and how high it is. I don't think that should necessarily be the case. So, again, just a bunch of random things that related to what I kind of thought about and saw noticed this morning. If you want to know more about, the idea behind us publishing these courses, again, let me go there so you get an idea. Let me do a screen share again before I end this podcast. I mean, our courses, as you can see, are predominantly, in this list are software related courses, but we've also started creating these trading related, investment related courses, because we've seen that people are interested. Gen Z, even people who have been in the workforce for a while, or folks who are entering the workforce. Schools and colleges may or may not necessarily teach this from either teach this at all, or from a pragmatic standpoint. So hearing it from someone else who's doing it, even whether or not they are professional in the space, so you can sort of have some takeaways or enjoy the course. If not anything else, you just get entertained or something, right? That's our idea behind publishing this. Hopefully you find as much value in them as we do. With this, I'm just going to end this podcast. Talk to you soon. Bye bye.